How did you manage to get that hallowed day one Coinbase listed?
Directional Bet is the biggest apps in crypto will launch their own app chains. It's been a defining moment for us, right? I mean, I was on the New York Stock Exchange this week. And
you were hanging out with the AI and crypto czar himself, right? One of the most important questions of all that I think most of the viewers would love to know. And this is the underlying alpha.
$1 billion.
$1 billion. GM, or should I say G-Move, and welcome to another interview here on Coin Bureau. And today we've got Rushi Manche. He is the CEO and co-founder of Movement Labs, perhaps one of the biggest crypto launches of last year. So Rushi, welcome to the Coin Bureau.
Thanks, Nick, for having me. Me and Nick met about a year ago. He's been a fan of the movie system across the board. So excited to be here today.
I joined the movement early on, guys.
Yep.
So guys, we've got a lot of stuff to cover, Rushi. But before we kick off, guys, it's of course important to note, as Rushi said, we met sometime back last year, and the Coin Bureau are investors in Movement Labs. So full disclosure is key, and we're glad to be supporters and supporters on that front. So with that disclosure out of the way, Rushi, let's kick off with a bit of a background, because just for our audience to get to know you a bit, because it's quite a remarkable story, you and your team's story. So if you can let us know your background, how you got into crypto and how this led you to founding Movement Labs.
Yeah, I'm Rushi, one of the co-founders of Movement. My background is more engineering and distributed systems. Started my career at United Health Group, was an early platform engineer, and was one of the youngest employees at the space. United Health Group is one of the biggest conglomerates in the United States, really focused on health insurance and health tech. So completely different than crypto, actually completely much slower than crypto. But I was really interested in distributed systems. How do you build peer-to-peer network scaling? And that kind of led me to crypto and researching blockchains. I had a family friend that was interested in Cosmos and was doing a lot of work in the Cosmos ecosystem. So I started tinkering around with Rust and Cosmwasm and all the good things of Cosmos and early Ethereum engineering. That was around 4.5-ish years ago. Around August 2021, I read this article that said Facebook was building a new language. For me, this was exciting because I was used to 10 users on Ethereum, 2 users on the Cosmos. And here was an opportunity for Facebook to put $1 billion research and then 1 billion users literally to the Facebook app. So from there, the Move initiative started from the Libra project. Unfortunately, due to regulation 4 years ago, it couldn't advance. I think today it'd be a different story. Aptos and Sui spun out from the 2 L1s from that project with their respective chains. And Movement was kind of the third one. We started building in November 2022. The thesis was always, how do you bring Move to EVM and Move to Ethereum? Today, what that looks like is a Ethereum scaling solution that uses ETH as liquidity while bringing the benefits of Move and the EVM combined. And yeah, we've come a long way, have raised ample amount of money. I think it's over 150 million to date. Launched a token, have a vibrant ecosystem, and now ready for the next phase.
Yeah, Movement's grown for sure. Just coming back to the founding, because I think, like I said, it's a very interesting story, and you just touched on it. Obviously, you're both university students at the time. And if reading into your background, and obviously I've listened to quite a few of your podcasts, you guys struggled initially to raise funding. If I recall, your co-founder had to sell his car, and you had to you literally started the movement in a dorm room. So it's literal trenches. So I'm just curious, that experience, compared to a lot of other people who potentially may have had a background and experience in big tech companies or within TradFi, and then they're able to go and raise. How do you manage to get through that period? And do you think that built a resilience that helped you to get and create now one of the biggest launches of last year?
Yeah, I mean, when we started, we were still in college. I was 19, Cooper was 22 at the time. And this was after FTX collapsed. So pretty much anyone that was investing or looking into crypto, thought crypto was a scam, had probably lost, 80 or 90% of net worth. So morale couldn't be lower, and it couldn't be the worst time building crypto. But I think for us back then, our edge was that we were young. We could bootstrap. We could live in college dorms. We could eat ramen noodles every day. And that was kind of how we lived the early days. I think that taught us a lot of resilience, hearing 100 no's before your first yes, literally. Everyone telling you that you're too young or too, don't have experience, which we didn't, right? I think we didn't have experience. But I think when you look at Web2 and the biggest incumbents, Zuckerberg didn't have, investment banking experience before he launched Facebook, right? Snapchat, Pinterest, some of the biggest moguls in traditional tech were founded by young entrepreneurs. So then when we look at crypto, I think that same story applies. There's a lot more young founders, especially this cycle, They're learning about crypto, raising crypto, and I think it's beautiful. So my TLDR is like, yeah, we struggled, especially in 2022, but that made us who we are today.
Well trained in the trenches, man. That no doubt you needed that to go through the launch you guys through went last year. So zoning in a bit more on the tech. Now, obviously you touched on it a little bit, but I think for our audience, basically, if you were to try and give an elevator pitch in simplistic terms, a movement obviously is composed of many different components, but for people who are hearing about it for the first time on this interview, can you explain exactly what it is in simple terms?
Movement is an Ethereum scaling solution to bring the Move virtual machine to EVM. So TLDR is the Move VM, which was built by Facebook, Aptos, and Sui. You have Ethereum, which is a liquidity, asset class, and ecosystem that we believe in, and has birthed, some of the biggest L1s, L2s. And then we have EVM compatibility. So right now, if you are a Move developer, you can deploy an Aptos, Sui, and Movement. If you're an EVM developer, you can't really deploy an Aptos and Sui. So what we say is allowing Solidity or Ethereum virtual machine developers and Move virtual machine developers to both deploy on the same environment and have Ethereum as a liquidity base with our bridge. I would say it's more like a high throughput kind of blockchain, some like Aptos and Sui and Solana, but we kind of do it our own way with our architecture that uses Ethereum consensus while also serving the broader ecosystem.
Okay, got it. Now, I'm just curious. Obviously, you say you first read about Move back in college and this language that Facebook was building on. And at that time, you also worked within the Cosmos ecosystem. And obviously, at that time, I'm sure one of the most predominant blockchain languages was Solidity. So I'm curious then, why did Move intrigue you so much then? And why are you so bullish on Move as a programming language now?
So I was a Solidity engineer in my early days, and then Cosmos was an engineer. And I kind of experienced the developer hurdles that EVM faces. So, for example, I was a college kid. I was broke. I couldn't afford, $100,000 for audits. So one of the biggest issues with Solidity is prone to attacks. So every year there's $4.5 billion lost in EVM hacks. This is predominantly because Solidity has no fault checking built in. So when you execute a smart contract on Ethereum or Solidity, there's nothing at runtime saying, hey, there's an integer overflow, there's a memory leak, there is, a type mishap. Basically, any mistake that you put on the blockchain in smart contracts isn't stopped by any kind of firewall or antivirus. With Move, you have the Move prover at runtime. So let's say, for example, I execute a transaction from me to Nick. The prover will say, hey, is every line of the code bulletproof? Is there any integer overflows? Is there memory leaks? Is there anything that can go wrong with the code? So it essentially does a last minute check at runtime, kind of like an auditor would, which is a concept called formal verification. So the mix of formal verification and parallel blockchain like BlockSTM allows you to have the best user and developer experience. So obviously 30,000 plus TPS, and that's the number that everyone is focusing on. But I think reducing the time of developer building, or where it's like I can deploy a smart contract in 3 hours without worrying about security hacks, having to go pay, an auditor like $100K to audit my code. And even then, like Curve, Kyber, the DAO, major DeFi protocols on Ethereum have been hacked just from simple re-uncertainty or other issues like that.
Yeah, so the security component is a big one. But when you were first exploring it in 2020, 2021, and 22, because I believe DM, it stopped out, like they ceased the project in 2022, right?
Yes.
At that stage, how advanced was Move? Like when you were starting to build on it, when did you actually was it open source initially?
No, I mean originally the language was open source always. There was a Move book, but there's pretty bare bones. There was no YouTube videos, very little developer tooling. I learned Move in a Telegram group. Because there was the early engineers there. I kind of knew Rust, so it was relatively, if you know Rust, you know Move. Mm-hmm. So any Solana developers can pick up Move pretty quickly. But we didn't, there was no materials back then. Obviously now it's changed. You have us, you have Aptos, you have Sui, kind of putting towards developer hackathons, developer resources. That didn't exist 3-4 years ago. So it's if you look at the growth charts, Move developer growth rate is second after Solana. So it's all-time highs in terms of developer growth, as well as developer tooling and all the benefits that we have in Ethereum today are now coming from Move.
Yeah, no doubt. One of the fastest growing blockchain languages last year, I think. Now, you made Movement Labs EVM compatible for a reason. and in that you mentioned
Yep.
liquidity. Now, obviously, from Solidity developers, like how, speaking to a Solidity developer now, how do you onboard them to Movement Labs, and like what sort of tooling do you have to allow that ease of transition?
Yeah, so the way we see the current state of programming is you have Solidity, which has still the lion's share of developers. I think it's like 60%, 70% of developers are EVM developers. The next tranche is like SVM and Rust developers, and the last tranche is Move developers. So even though alternative VMs like SVM and MoveVM are more performant, better, etc., there still is a huge market of crypto developers that are on Ethereum that are Ethereum aligned, have Solidity contracts. So in the short term, acquiring developers is the main goal, and taking them from other Move-based chains isn't our goal. There isn't enough to go around. Taking them from Solana isn't our goal. Again, there still is very few Rust developers. We want to convert and support the current Web3 developers, which are in Solidity. So you think of it like the EVM part is catering like backwards compatibility. So yes, Move is a language we're focusing on and what we're supporting, but we also want to support the versions before us. So that's kind of the mix of both.
Okay, got it. And have you been onboarding Ethereum developers so far in terms of like people who've been developing on Solidity, and how easy has that been for you guys?
So I think like most of the developers that we have are already EVM developers that convert to Move, and then the current Move developers that are continuing to Move. So I would say within the core ecosystem, they're all mostly Move developers that we've been working with since inception, basically since we were like 2 days ago, or like 2-3 days ago, or 2-3 years ago. Sorry. And then now we have a lot of Solidity developers that are Ethereum developers that want more access to Move, want more access to the Move ecosystem. So they're now writing Move. So I'd say like 60%, 70% are Move developers that are existing. And now we have like 40, 30 or 40% that are EVM developers that are converting to Move ecosystem.
So obviously, there's a few other layer ones, Move layer ones out there. Obviously, Sui Aptos, who came from Libra, which which was the project we're talking about. Now, I'm curious. Apart from the EVM I'm sure there's many things, but like most people know, okay, Movement Labs is kind of like a collection of blockchains, Ethereum layer 2s that are EVM compatible. But apart from that, what other things differentiate you guys from the likes of Sui and Aptos?
So I think, firstly, majority of our focus is on the ecosystem and community. So obviously with the airdrop, I think a lot of people are happy with that. That kind of ties into our ethos, how we are a community first blockchain. So a lot of our community members were participating in testnet and Parthenon, which is our testnet program. They were playing with that for a few months and essentially got like some of them life-changing airdrops. Secondly, I would say like our ecosystem is the main crux of our growth. There's more venture funding today in the movement ecosystem than Aptos and Sui combined. This is generally because my main focus and the core team's main focus is venture funding to ecosystem. Because the number one stat that can't be gamed is venture funding. You can't like force a VC to invest in ecosystem, but you can make up numbers on like transaction volume, on like trading volume, on TVL. Like these are all things that can be bought, sold. But the number one thing that you can't get is like getting Nick to invest in ecosystem, getting like Polychain, some of these other VCs to A, take a directional bet in the infrastructure, which is movement, but B, take a bigger bet into the apps themselves, which is kind of our focus.
Yeah, that's really interesting. I guess because it's like, because venture investors, like some of them will be like, oh, okay, when token, or is it going to be an airdrop, or from that perspective, what's your TVL, what's your growth, or what's your go to market? Whereas it seems from you guys, you raised a lot prior to even getting TGE, and it was just purely based on the vision that you guys had for this project, right?
Yep.
Not in any of the sense of deliverables, and which most low tier VCs would probably want, right? When token, when exit, kind of stuff like that. It's actually interesting because your community first notion. I don't know if you recall this post you wrote last year: community versus insiders. Can they both win? Did that inform you? Did that inform a lot of your this community-driven first approach?
I mean, I would say like community insiders have both one, right? You have insiders obviously like have venture invested and like are up several times on their investment as it stands. But you also have community members that were early in the ecosystem, were contributing and got liquid airdrops that they're holding, selling, trading, etc., and now using the chain itself. So I think there is a world where both community insiders. Insiders are obviously taking a long-tailed, multi-year capital lockup bet, while like community members are obviously, using the platform, they're your users, right? So in traditional tech, you have like the venture investors that investing in equity, and then you have the users which are paying revenue and getting services. In crypto, you don't really have the concept of revenue per se. You have users who use the platform, use apps, but there's no oftentimes like the infrastructure forgets that the customers are the community member, the VCs are the community, like the founders aren't the users. It's usually the community members. So I think what we focused on, especially for launch, was making sure investors are happy. That's pretty straightforward. But how do you make sure the community is happy? I think being a little bit more generous. So you need to be taking like even my personal comms was like interacting with people, answering their questions, putting my face out there, and I think people enjoyed that.
Yeah, you guys are really unique strategy in terms of marketing strategy in general. I think quite Gen Z focused. With short form content on Twitter, like the Twitter game is killing it, and consumer friendly explanations. So, do you think this approach has helped you guys?
Yeah, 100%. I think like we are a pretty good marketing team. Like Will's our head of marketing, and our marketing has been a driving force for us, especially. So even like for ecosystem building, partners will come to us and be like, I want to build a movement because I want access to movement's marketing. I want Rushi to quote tweet. I want like the founders to talk about each other VCs. And I think that's been a huge driving point because I think other chains typically lack marketing. They try to focus on the tech and focus all on research. When in reality, apps want just two things. They want infrastructure that can scale, obviously, so they can hit their user marks. But I think there's a lot of parallel EVM, ZK L4s, right? There's a lot of infrastructure that exists to scale. I think we're at the point where infrastructure is good enough. So now a lot of these apps are playing, okay, where can I accelerate the most? Where can I go to get the most VC funding? Where can I go to get the founders to talk about me and, have a lot of likes on my posts? So we serve as a distribution channel, and me personally serve as a distribution channel. So when apps are like, I want to get 1,000 MOU by the end of this month as soon as possible, we can go to them and be like, look, if you could join us, you're exclusive to us, or you build on top of us, we can share content, get VCs interested, and that's what we've been doing. So I think that now allows you to build an effective brand, which enabled us to kind of attract more talent coming to us.
Okay. So just coming back to the tech side of it again, and I remember when I did an interview with Adonai from Sui last year, he said that the strategy for Move is like, not necessarily, like you say, taking blockchain developers from other ecosystems, but onboarding Web2 devs to Web3 through Move. So do you guys have a similar kind of strategy on that?
Yeah, I mean, I think we are all in this space to attract new developers and, Web2 developers. So what's interesting is that the Move language is the most intuitive to pick up. So it's very object-oriented. It looks and feels like a JavaScript or like a React and Vue, and it also enables you to go to market quicker. So because of the security advantages, because it has form verification built in, it allows you to, not have to worry about registry or like integer overflows because it'll flag those things to you. So for Solidity, if you're a new Web2 developer, there's a lot of security elements that you don't really know. So let's say, for example, you're a Web2 developer and you're writing websites. You're not used to worrying about, smart contract leaks or financial crime, stuff like that. But in Web3, like if you forget to audit your code, you've missed a lot, even like Cairo attack was one line of code that was wrong, and that cost them $25 million. So those principles don't really exist in Web2. So our go-to-market is, going to JavaScript conferences, going to Web2 conferences, explaining the visions of Move, talking about how it was built by Facebook. Literally, it wasn't built by, a crypto person. It was built by the biggest tech company in the world, or one of the biggest tech companies in the world, designed for, getting them to use crypto. So I would agree with Denny and Mo and a lot of folks that our goal for Move is to attract new developers to space.
Yeah, I mean, because basically when you look at the Web2 space in terms of developers and how small crypto is in that, I think the stat is there's more developers in Facebook than the whole crypto ecosystem, right?
Yep. Yeah. Exactly. That was I think I tweeted that a while back. So I think the developer ecosystem is way too early, way too young. There's only 15,000 or so developers. There's like JavaScript has a few million. So we're still very early. So Ethereum, EVM has not won. I would say the space race is still yet to happen.
Go, man. So another quick coming to another on the tech side of it, or the infra side of it, and it's probably one of the biggest debates last year was the whole modular versus monolithic debate, right? And obviously you guys are a collection of modular chains on top of Ethereum. And I'm curious what your take is on this, because obviously there's the argument from Monolithic, you like a Solana, you want one big monolithic chain where the liquidity isn't fragmented and, fast performance and work on the L1. And then there's the modular component, which is like, okay, well, allow people to plug and play, composable. And then you outsource a lot of the part like your validation or your data availability. So I'm curious to get your take on that debate.
Yeah, I mean, I think what we're seeing today is all the modular chains are maturing. So, like ETH Denver last year, I was on doing a fireside with Nick from Celestia, and his prediction was there will be 100 chains using like 100 rollups by this time next year. And today, there's well over 100 chains. There's a lot of different modular chains, L2s, L1s, etc. They're having their own ecosystems. I think what we're seeing this year is all those chains go live. So you have Movement going live, you have Eclipse going live, you have other folks like Nisha. So all the modular chains that were ideas this time last year are now coming mainnet. So I think the biggest pushback on modular from like the Solana camp was the UX would be fragmented. The UX would be quite difficult to use. But then you look at Solana today, and there's a lot of Solana L2s coming up, right? There's a lot of venture funding into Solana. They call them network extensions. That is showing signs that even Solana, which is the monolith, has to have modular chains capacity to scale. So I think the modular vision has panned out exactly the way it is, but I don't think it's modular versus monolithic. I think both, like I said last year, we're going to coexist. We'll always coexist. If you want to use a great smart contract platform, you will use a monolith. It's easier. You can bootstrap and go to market much quicker. If you want to customize your performance, if you want to mod the car, if you want to launch your own app chain, you will use a modular chain. It's your incentive to customize and build your own app chains. And our directional bet is the biggest apps in crypto will launch their own app chains because it's their incentive to do so. So you look at Hyperliquid, huge crypto app, custom app chain. I think Polymarket's in talks to launch their own, chain. You have a bunch of other crypto app. Pretty much every top crypto app is thinking, okay, now that I have some kind of PMF, you have like Uniswap doing Unichain, Aave doing Aave chain. They're all looking to launch their own chains. So that's some kind of modular thesis that's panning out over the next 6 to 12 months.
That's the original OG Cosmos thesis, right? The app chain thesis. Are you leveraging Celestia? If I recall, I think M2, your M2 product was. Are you still leveraging that?
Yep, we're still on Celestia for DA. It's just Movement is the chain for Celestia.
Got it. So keeping with this theme, just curious because obviously you've also seen over the past few months, but especially over the past few weeks, there's been a lot of FUD in the Ethereum ecosystem. Part of it could be the fragmentation of liquidity across the layer 2 ecosystem. That's what some people are saying. But obviously you can just look at the chart as well, the ETH BTC chart. And I mean, markets usually determine the value of a protocol. As someone who's building a project that's based, settles on Ethereum, I'm curious to get your view on the whole ETH ecosystem right now and the FUD around it.
I think what's interesting is that, we're not directly L2 per se. Like, actual architecture looks more like a L1 that bridges to Ethereum. We have this concept called post confirmations, and we have our own validators. We move as gas fee, move staking. So I would say we're kind of different from the Arbitrum optimisms of the world. The Arbitrum optimisms of the world use Ethereum for liquidity directly, use Ethereum as gas fee. So I think they are in a more difficult position because they're very tied to Ethereum as a culture. For us, I would say most people don't even tie a movement to Ethereum. I think we're more the move ballpark. But yes, I would agree there is a lot of issues around the Ethereum system. Some that I'm not really a fan of. I think that Ethereum has kind of taken the wrong direction in that being incredibly neutral, letting the builders come and doing whatever they need to. That worked last cycle, I would say. This cycle, Solana is kicking their ass because they are king-making, they are going after celebrities, they are getting the president of the United States to drop a token on them. While Ethereum is still in this ballpark of saying, you know what, we'll let the layer 2s be the culture extensions, layer 2s be the face. But the issue is that the L2s rely on Ethereum for culture. So it creates a cycle of Ethereum L1 saying we need L2s to do their work. L2s are saying we need Ethereum to scale. And they're both pointing fingers at each other. When in reality, Ethereum should be taking a bigger stance, and they've been coming out last few days on their improvements. Ethereum should be taking a bigger stance of where they want the Ethereum ecosystem to go. While it's in the past, it's been, taking a backseat, letting the rollups do what they want to. So I'm still bullish ETH as asset class. I think it's still, the silver of crypto. I do think there needs to be major changes. And movement is honestly a change. We are not ETH aligned L2. We have our own validators. We have our own staking. We have our own, consensus. We don't use Ethereum beyond this liquidity hub. And I don't think that ETH is directly correlated to move at all.
Fair point. But so you as you say, you think ETH can be saved. It can recover. It's just a change in structure. Even Vitalik changing his the profile picture to a milady. That's going to do it.
Yep. I don't think that's going to do it per se. I do think he needs to be. I think he's more aggressive these days and understands the need for him to step up. So he's definitely working on that.
Yeah, the Solana guys have got it right in terms of it. In general, you got to be aggressive in the onboarding stage, and you have to be also adaptable, right, and quick to move. And I think the problem with Ethereum, I suppose, from the way I see it, is also it is such a big juggernaut. It's difficult to make changes when you're that size, right? I mean, look at Bitcoin. It's very difficult to get bips through. It takes months, years. So just coming back now, obviously. Your launch, like I said at the beginning, it was the biggest launch, one of the biggest crypto launches of last year, right? And what was interesting about it was obviously right out of TGE, you guys got listed on some really, in Coinbase, right? Which is obviously the premier list and the gold standard most people look to. So without revealing any state secrets, I'm just curious what went on behind the scenes and how did you manage to get that hallowed day one Coinbase listing?
I mean, it was a mix of luck and honestly us working really hard and explaining the vision to the respective exchanges, right? The exchange game is probably the one most black box thing in crypto where no one really understands how exchange criteria works, what the process is, and there's not much transparency around it, unfortunately. Usually it's driven by hype. So the hotter your project is, the more demand there is for each system, the more mind share you collect. And I think Cato has been a good job collecting mind share kind of statistics. The more mind share a project has, the more demand there'll be for it. So across Coinbase, across Binance, OKX, even Korean venues, we were explaining the move vision, explaining the move thesis. Aptos and Sui both were all-time highs, and Sui was particularly doing predominantly well. So the market was okay, what's the third incumbent? And I think that's where movement kind of shined. And we had a unique edge. We sat more Ethereum ecosystem. We had EVM. We had a community. So the pitch made a lot of sense to VCs, exchanges, etc. That understood the thesis. But obviously, it was getting day one is obviously very challenging, and most people don't get it. So we honestly got a little lucky, lobbied hard, explained the vision, and came to the last minute.
And how, just to give an idea in terms of how long the process was from the discussions, how long the discussions take to just for people who are thinking about behind the scenes for a project that's going to go towards a launch in a TGE. How long did it take you guys from the start of the discussions to actually getting ready for your day one launch?
From the time we finalized the TG time, probably 4.5 to 5 months.
Dedication, yeah. So just going back to the ecosystem now, the movement ecosystem, in terms of you say you've been reaching out and you've got the outreach programs with regards to JavaScript developers, etc., as well as Solidity developers. Are there any DApps that are currently building on top of movement? And then you want to just let me know what they're currently building?
Yeah, so I'll go through some I'm excited for. So first is DeFi. I think DeFi on Ethereum has always been bottlenecked by security. So a lot of LPs, family offices who wanted to deploy capital into Ethereum-based DeFi often were turned off by the risk profiles. So apps on Blast, Arbitrum, Base have always suffered from security hacks, memory leaks, and it's not the best way to park capital. So our goal is to be the most secure way for DeFi to exist on Ethereum. Two main protocols, Echelon, Meridian. Echelon is a money markets, kind of Aave style. They raised $3.5 million. Meridian is our core capital efficient DEX and LST protocol. Those will probably be the main kind of DeFi, but there's also a bunch of meme coin launch pads like Yuzu that are doing phenomenal, and Warpgate. Secondly, I think we're focused on AI. So I'm spending a lot of time on Move and AI intersection. So firstly is Axel, which is a network of verifiable agents. So they're doing like Move 16Z and doing AI agents from that. And thirdly, I would say we're focused on like vertical focused consumer apps. So like Bracket, Henry. These are two major. Bracket is like swipe to bet prediction markets. Henry is kind of this shop to earn. So every time you shop on eBay, Amazon, etc., you can earn Move and other tokens that way. So I think across the board, what we're seeing is this big demand for secure DeFi, high throughput AI and agents interacting, and then also like vertical first, TikTok, Pinterest style consumer apps.
Yeah, I mean, so what about RWAs? Because I know you guys also Project Novastra working within your ecosystem.
Yeah.
What's your thought on that narrative, and also like the project?
Yeah, Novastra is a great team. We're working closely. They're actually TGing next month as well, and will be the first movement native TGE. I think as the institutional landscape for RWA products on BlackRock, on the U.S. Treasury was even like Larry Fink called this morning for U.S. Treasuries to be minted stocks and bonds. So in the past, you couldn't tokenize stocks because of SEC regulations. Larry Fink is calling for that regulation to be removed and to have NVIDIA on chain, to have Apple on chain, to minimize the dependency on brokerages. So with that, I think like there is a huge market for not even real. I hate the word RWA because that means that non-RWA are fake world assets, but just assets that exist off-chain, on-chain. So stocks, bonds, real estate properties, wine, watches, cars, these are all off-chain assets, but we can store them on ledgers on-chain and transact with them. So let's say, for example, Nick, you have a really cool watch that you want to gift me. Let's say it's like a nice Rolex. There's actually a team called like Watches.io, I believe, that's doing kind of watch trading on chain. The settlement for those transactions can occur fully on chain, verifiable. You can verify the money's in the escrow, which solves a lot of like scams and rugs that happen in like eBay and like Craigslist for these watches. So I do think there's a huge market. There's obviously pending a lot of regulation, but with the new administration, I'm more bullish.
Just sorry to extend on this topic. I mean, do you think that there's a demand to tokenize specific kinds of real world assets? I mean, obviously, for example, a watch or a house. Like, would someone really want to own a piece of a house? Obviously, one thing to put your a watch on a blockchain and escrow it to kind of, but like to own a piece of a house, because it's kind of like for me, if you remember back to the 2018 cycle, we had the security tokens, right? And they didn't really take off. Now, obviously, RWAs is exciting, but that's just because most of the growth in terms of TVL and things building or issuing on chain are treasuries, and that's basically it, right? Most of the TVL in RWA protocols is treasuries.
So I think like owning assets, like no one wants to buy a fraction of a car per se. I think that's probably not the biggest market because you buy a car to drive it.
Yeah,
I do think for like real estate, for example, let's say, for example, you only have $50,000 in your portfolio and you want access to New York real estate. New York real estate costs a few $1 million in cash to buy. So I think like as investment vehicles, RWAs make sense. Where let's say, for example, you have 200,000, you want 10% in New York real estate, 20% in stocks, 30% in bonds, and 50% Bitcoin. In the past, like you couldn't really buy a fraction of a deed to a house or a fraction of an apartment in Soho, Manhattan. But now with crypto, you can potentially tokenize that, split the ownership, and have that fully verifiable on chain instead of like years of paperwork and like, all this like accountant and lawyer fees. You can like buy, sell, and trade New York real estate in real time on the NASDAQ speed, basically. So I think that velocity is much needed. Obviously, I think like there's certain asset classes, like you don't want a fraction of a watch per se, you probably don't want a fraction of a car. I don't think those make sense or large demand today. But large, like long tail assets like real estate, commodities, gold, silver, even I think GPUs are going to get interesting. That's where there's a lot of demand.
Okay, cool. So just going back to some of those other projects you mentioned that are built in there. on the AI agent front, what was the Move 16Z? You said.
Yeah, I mean, Axel was a team. Like they're part of it. Like Andreessen Horowitz backed them, and they're a smart young team. And they've been a network for verifiable agents. So right now, agents that exist on like Base and Solana, it could be an actual agent, or it can be some dude in his mom's basement. There's no way to verify that they're actually AI behind it. So what Axel is building is attestations, where if you see an AI agent, you're trading with an AI agent, you can prove on chain that they are in fact AI, instead of trust me broing it. So that's what they're working on. They have a few platforms like Move 16Z where they can launch AI agents.
Fascinating. What's your perspective on the whole AI agent, the meta right now? Obviously, because it seems to have taken a lot of the wind out of the sails of meme coins until Trump launched his meme coin, but be that as it may. Like, obviously, towards the end of last year, AI agents was just the main meta, the main rage. And there's been a lot of discussion now around, okay, is it just the meme coin tokenized attention now transfer into the AI agent space, where a lot of these AI agents are just with meme coins bolted on and no utility, no use cases. So I'm just curious to get your take on it.
I think meme coins, I would say, don't need utility, and I don't think they're meant to be. Like the president of the United States dropping a meme coin wasn't for like governance or any kind of utility that way. It was purely for speculation, which, for better or worse, is a predominant, if not the dominant, use case for crypto today. I mean, this is early decel, big cloud days for you guys, if you guys remember that, where people could have their own markets and people could buy, sell, and trade the likeliness of a person. So, like, you could have Elon coin, and if Elon, launched a SpaceX rocket, the token would go up 10%. If Elon had a scandal, it'll go down 20%. That was normally in the big cloud, platform, and I don't think the market was ready for it 4 years ago. Today, I think with the regulation, and more celebrities, more people of likeliness are comfortable dropping these tokens. Like, if the president can do it, anyone can do it. Is kind of the thesis, right? So you had Melania, you had famous athletes and rappers all dropping their meme coins. I think if it's done in a regulated, they have the right people around them and right tokenomics, and doing kosher ways, I don't see an issue with it. Obviously, you have like the rugs, and like there's a lot of even like the Vine founder got hacked recently, and the national Cuba account got hacked, and there was a scammer behind the mic. So obviously it introduces more rugs and people lose money. But that was like early internet, right? You had a lot of websites popping up that were scams, but it doesn't mean all websites are bad. So I would still say meme coins and investing in likeliness is a big feature of crypto, and there'll always be scams, but in the broader tail of things like Trump are still good for the ecosystem.
Yeah, I kind of agree. I think that obviously it's liquidity and and also to a degree, a lot of the tokens from the past, a lot of utility, so-called utility tokens, or these high FTV, low float, kind of like the tokens themselves have no use cases in any way. So they're basically just memes. There's a whole myriad thesis. But just in terms of what I was saying, in terms of the AI agents themselves. So do you think the hype is overrated to the degree that it's just kind of like, because I've seen, like I say, it's coming back to the discussion around this is just, they're just AI agents with a meme attached that has their tokenized attention? Or do you think that we really see an explosion in like new use cases for crypto in these AI agents?
Well, I think, the AI agent side, there will be a big, like even Jensen Huang from NVIDIA was like, AI agents are going to eat the world in the next 5 to 6 years. So like things like your assistant, things like Excel spreadsheets, things like I don't know, doing pitch decks. I think AI agents will automate 60-70% of our life, and I think obviously it's always been paid to like attribute to just AI, but where crypto comes in is how do you create economy for these AI agents? So if you buy that agents are going to run the world, let's say you have agent in Dubai, I have agent in New York, how are they going to interact with each other? Are they going to use banks? Probably not, right? Because like wire money from New York to Thailand to New York to Cambodia takes forever. Like there's a lot of fees associated. It's very slow. So it seems inevitable when this AI explosion comes, AI agent explosion comes, they will use crypto to transact and pay each other and settle transactions and settle each other. So like there's this egalitarian play that's exciting, that's developing. It's like, is there a world where agents will use stable coins to pay each other? Is there a world where agents will tokenize assets like the RWAs we're discussing all on chain? I think it's still early, and we gotta get the AI part down first before the crypto part. But I do think like the question is ultimately, if AI agents run the world, how do they transact? They're not using bank accounts, so they have to use crypto.
Yeah, especially if it's microtransactions. And in that case, you're going to want a highly performant blockchain infrastructure to do that, right? And not high gas fees. Exactly, right?
That's where we come in.
There we go, man. So just quickly let's take a step back now, obviously, and take a look at the regulatory backdrop, because a lot has changed over the past 2 months, especially just the last week, right? It's abundantly clear that crypto is one of the biggest winners of the US election, and we're about to see a flood of crypto regulations, legislation, executive actions, as we have indeed seen. So, as a US-focused and US-built blockchain, I'm curious, how important is this to you?
I mean, it's been a defining moment for us, right? I mean, I was on the New York Stock Exchange this week, and the entire talk was about Trump and the new regulation, SEC. And we've seen, like, in the last 72 hours from the time this podcast is taking place, we have a new SEC task force led by David Sachs and, a crypto economy around the SEC. In the past, Gary Gensler was obviously very, very against crypto, was designing. It is actually not even against crypto. It was very uncertain what the policy was. Founders like myself based in the States, they didn't know what the rules of road was. You didn't know, hey, can I issue a token? Can I have fees generated back? There wasn't rules to play back. I don't think any founder in the United States was saying, I want crypto to be unhinged. We want regulation. We want, people telling us how to play the game, because that gives us guidelines to be effective founders. The issue that last administration had was there were no regulations. You could be, building crypto and the next week go to jail for no reason. And be claimed, for drug, whatever. So I would say because of that, we actually have a lot more sanity this time around. We have a new SEC that's pro crypto, that has a crypto task force designed to create regulations, help founders navigate the landscape, and keep American businesses in America for crypto. Secondly, obviously Trump himself has been pretty pro crypto. He has a Trump coin. He has, World Liberty Fi. He has Trump NFTs, which kind of show his signal for crypto. And then from the policy point of view, we're seeing potentially a national Bitcoin reserve. So obviously the government holds gold on the balance sheet and other stocks and assets on the balance sheet, but crypto has never been held as a national treasure, national reserve. The moment that happens, you now have billions of dollars of buy pressure. You have the government saying crypto is here and it is a gold for us standard, which I think sets a huge standard for other governments and other markets to adopt it. And thirdly, I like to say is, like, what we're going to see is more TGEs in the United States, where founders don't need to do this Cayman, BVI, Dubai, Singapore structure. They can token generate in Wyoming, in Montana, in states that are pretty pro-crypto. So across the board, I think we see financial, legal, and just social growth for crypto with the new administration.
I can imagine how it must have been, because like prior to Trump winning the election, like last year, there was a lot of FUD in the US in general, and a lot of US crypto projects did offshore. People were thinking we're going to move offshore. Did that at all ever enter your mind? Because you must have seen all these crypto projects that are using these entities offshore, that have moved offshore. What encouraged you guys to stick out? Was it just waiting for the election, or was it like other reasons why you thought, no, I'm going to stick it out?
I mean, we have like a foundation set up that's offshore, and like the foundation is registered outside the United States, so we can handle the risk profile there. But I would say, like, regardless, like me and Cooper, my co-founder, were born and raised in the States. Our office in San Francisco. We have grown up and spent all our time in the States. So for us, we want to be a leader for America in crypto. We don't want to run away. We don't want to do the easy thing, move to Switzerland and launch a token from there and live on the Alps. I think we prefer to go through war, go through working with administration for the hopes of a brighter future. Because for crypto to ever truly reach adoption and be the digital asset ledger for humanity, United States of America needs to buy in. United States of America needs to be a leader in policy. Obviously, China and Asia isn't a big leader, and I think we see exactly what's happening in AI right now. In AI, you have obviously OpenAI, Palantir, the big players in Silicon Valley, but you also have China as emerging technological giant that is investing, that's supporting. And as you see that in crypto, China has actually had the lead in crypto, I'd say. Majority of exchange volumes on Binance, which Binance and Upbit, which obviously are more Asian exchanges, while Coinbase has been stagnant in volume, but more Signal in kind of significance, policy, etc. I think that changes when we have more volume going through Coinbase, and you have multiple American, European exchanges that can rival the East and West.
Okay. And one of the predictions you just said in terms of what you foresee for US crypto companies is a lot of TGEs this year. I'm curious then as well, because obviously, the whole token thing was one big issue with the SEC, the security question, all that kind of stuff. But do you also think that airdrops will now be made available to more US citizens and people? Like, because most projects all the time have just like restricted everything to the US. Like US investors have basically just been like sidelined completely when it came to a lot of these lucrative opportunities.
Well, I doubt they've been sidelined because always the VPN,
Yeah, I mean,
kind of
it's
tricks.
like legally, yeah, but I mean, okay, fine, yeah.
I think like it will change. That will probably be removed in the next year and a half to 2 years. I would presume. It seems kind of silly that you can't get airdrops. There'll probably be some like consumer protections and kind of policy put in there, but I can't imagine that's practice stays, especially because it's ineffective. I think majority of people claim it's airdrops or just pressing, their NordVPN and going straight to Cambodia for the location. But yeah.
Okay, cool. So coming back to this Trump pivot, this Trump euphoria, one of the most important questions of all that I think most of the viewers would love to know, and this is the underlying alpha. What happened? The alpha at what happened at the crypto ball last week? Because I believe you were there, right?
Yep, I was there. It was a good time. Was with a lot of politicians and senators, and there wasn't anything crazy. I think obviously Trump coin dropped. No one knew about the Trump coin there.
Yeah, no.
I was actually with Sam from Frax Finance, and he pulled me aside. He's like, "Yo, like Trump dropped a coin?" And I was like, "What?" And then I was like, "Oh, this is crazy." But I would say it wasn't like that mysterious. It was just you're the founders of Coinbase, you're the founders of every major VC. You had Ted Cruz, you had RFK, you had David Sachs, and it honestly made me more bullish in crypto. Everyone was really excited about policy. Everyone was really excited about technology. I think as crypto people, we kind of get jaded often. We're always like, oh, this is like, another scam. Like everyone just in here to rug each other? Is there no more capital coming in? And I can confirm that the major players at government level are very, very excited about blockchain. They're very, very excited about crypto. There is policy coming, and it has come already in the last 72 hours. There is large capital from BlackRock, from these big institutions that they're serious about this stuff. They're serious about tokenizing. They're serious about buying Bitcoin. They're serious about buying Ethereum. They're serious about buying DeFi. The principles that we've been working on for the last 7 years, I think we all got jaded a little bit, and if it wasn't for this, it might be difficult for the industry to continue. But the crypto ball is purely focused on fundamentals, focused on why Bitcoin as asset class will hit $1 million, why it is a national gold, why Bitcoin needs to be a strategic reserve for the government, why every tech company needs to have their crypto strategy. People from Facebook there as well, right? So I think it made me overly optimistic for crypto as a whole.
No, man, you were hanging out with the AI and crypto czar himself, right?
David Sachs himself. I mean, he's a great guy. I had a lot of respect for him, and yeah.
That's cool, man. Yeah, I'm sure it wasn't just one big party. It was a lot of exciting stuff you guys were talking about and a lot of vision for crypto. But it is quite crazy that no one there, back to the meme coin thing, no one there, you knew that it was dropping,
Yep.
Many people just thought initially like, well, was his account hacked? But yeah. Hey man, welcome. No better way to get the ball rolling than actually Trump launching his own meme coin. Wow, that's ringing in.
Of course.
Crypto. He's got to go in true degen fashion, right? That's nothing other than trenches and actually launching his meme coin. So just can you let us know about some of the most exciting things Movement Labs has got coming in the next few weeks and months that our audience should know about?
Yeah, so we have full public mainnet coming up first week of February, early February. And then we have our kind of deposits program, so you'll be able to interact with a bunch of our core blue chip protocols and deposit TVL liquidity. And yeah, I think we are seeing across the board. Very excited for the first move-based ecosystem launch since Aptos and Sui, and more to come in early February.
Early February, okay. Mark that date. So we are, of course, crypto YouTubers. So I thought I'd round off with a few predictions. Right? Crypto YouTubers love their predictions. And Don't worry, it's not going to be asking you for what's the move price going to be, all that kind of stuff. I don't want to get you in trouble there. But I'm just curious because I asked the same questions for Adene last year. And I want to get your perspective then. So predictions for the end of 2025. My first one is the total number of developers building in Move as a programming language. How many do you think?
I think it takes, I look at market share because number of developers is very low. I would say 30. Right now we're at like around 13% of total market share. I think by this time next year we're at 25%. Where a quarter of all developers in crypto are Move developers. I think it splits like 40% EVM, like around 25% SVM, and the rest Move VM.
Yeah, and it's going in that direction anyway, as well as you can see in terms of the trends, right?
Yep.
And now another prediction in terms of the total number of DApps or projects building on Movement.
I think we will see 75 live apps. I look at venture funded apps. I think like right now we have 14 venture funded apps. I think we had 25 venture backed ecosystems that raise, and also TGs. I think we'll have 7 to 8 successful TGs by this time next year that people can buy, sell, and trade on the Movement chain.
Got it. And then another prediction: total Movement TVL by the end of the year.
$1 billion.
$1 billion. Billy. Movement to a billy. Got it. And finally, will Trump add Move to the strategic crypto reserve?
Let's do it, of course. I think they're all coin reserve, and I think we're working on a few things that could get us there.
He needs to diversify that crypto reserve, man. It's got to add some. You got to have some Bitcoin. It's obviously got to have some, maybe a little bit of ETH, maybe just a bit, but mostly the Move-based chains.
Yep. Of course.
Cool. Rushi, thanks a lot for this discussion. It's been super engaging. Like I said at the beginning, I'm really bullish on Movement, and hence the reason we invested. And you guys have obviously, like I said, grown a lot. You're at the center there in the US. So in terms of our viewers and listeners, where else can they get some of your perspectives, follow the Movement ecosystem if they want to indeed like on board there, if they want thinking about building on Move, like you can just let us know where we can get all these resources so they can touch base with it.
Movement Labs XYZ is my website. I'm personally on Twitter at Rushi Manche, and Movement Labs XYZ on Twitter. We're probably most active and doing strategic pushes on Twitter itself.
Cool, guys. So we'll link to that down below so you can check it out. So thanks again, Rushi. Really appreciate coming on. Really interesting conversation. And hopefully we can do it again soon. Maybe in February once some of those exciting updates are released.
Of course, man. Thanks for the time. Appreciate it.
Man. Cheers.